Good morning and welcome to the Business Lens of Rapid Television, Abuja. And it is great to have you with us on this beautiful edition where we are to discuss the numbers, the figures, and how it directly affects you and your businesses. My name is Divine Alex. So let's begin with the key business trends that matter right now, starting from the headlines. The federal government has unveiled a 12 billion naira digital economy research fund to support data-driven policy making and innovation as part of its broader plan on the Project Bridge to deploy 90,000 kilometers of fiber optic infrastructure and accelerate Nigeria's digital transformation. On to the next, where Dangote Refinery has slightly eased pressure in the downstream sector, cutting its petrol price to 1,200 naira per litre from the initial 1,275 naira per litre, with a coastal rate of 1,153 naira, which is a move expected to lower pump prices marginally, even as the refinery continues to navigate global oil volatility and a 79.5 million barrel crude supply shortfall that was recorded between October 2025 and March 2026. So while consumers may see slight relief at the pump, the bigger question remains: how sustainable are these price adjustments amid supply constraints and global oil shocks? On to the next, where we have, despite Nigeria's banks raising over 4.61 trillion naira in fresh capital, we have concerns that are growing that credit is still not reaching the real economy, with private sector lending stuck at just 17% of GDP. We have the SMEs getting only 1% of total credit, and most loans remain short-term, which raises questions about whether the financial system is truly supporting growth and job creation. Now, while banks are stronger on paper, the bigger issue now is whether that strength is translating into real support for businesses, for jobs and economic growth. This is leading us to the next story, where it says the federal government is targeting to connect 5.2 million Nigerians to electricity by June 2026 under the $750 million World Bank-backed renewable energy program, which has already reached over 3.6 million people, as efforts to continue to expand access through solar mini-grids and off-grid solutions, despite ongoing funding and structural challenge. Now, while Nigeria continues to battle power shortages on the grid, this shift toward renewable and off-grid solutions is emerging as a critical pathway to closing the electricity gap. Now, there's fresh tension in Nigeria's power sector as the federal government and GENCOs clash over outstanding debt, with authorities saying liabilities could settle around 4 trillion naira after reconciliation, down from the initial claims of 6.3 trillion naira, even as over 60% of the debt is linked to gas suppliers, raising concerns about transparency and the true scale of the crisis. And at the heart of this dispute is a bigger issue. If the numbers aren't clear, can the sector truly recover or attract investment it urgently needs? The next story says foreign capital inflows into Nigeria's banking sector surged by 93% to $13.53 billion in 2025, accounting for over 58% of total inflows, as investor confidence strengthens amid ongoing recapitalization, even as investments into equities declined during the same period. While banks are attracting strong foreign capital, the key question now is whether this influx will translate into real lending for businesses and economic growth. Now to the next one, that says the naira is showing signs of cautious stability against the British pound, holding at around 1,837 naira per pound and maintaining gains below the 1,900 naira psychological level, as recent CBN reforms and stronger reserves begin to support the currency despite ongoing global pressures. But the big question remains: can this sustainability, can this stability be sustained, especially with global oil price shocks and the whole risk on inflation that is still looming? And deeper into the markets, in the stock market, we have the foreign investors that are still pulling money out of Nigeria's stock market, with outflows rising by 9.12% to 72.32 billion naira in February 2026, even as inflows improved. Now, this highlights continued caution amid lingering macroeconomic uncertainties. While foreign capital is entering some sectors like banking, the stock market is telling a different story, one of caution and selective investor confidence. So we'll be looking at those stories and more on today's edition after the break. My name is Divine Alex. Stay with us. You're welcome back. This is still the Business Lens of Rapid Television, Abuja. My name is Divine Alex. Now, Nigeria's economic story right now is playing out on a multiple fronts at once. Yes. Now, we have a situation that was from 12 billion naira push into digital economy research and massive fiber rollout plans on the project bridge to shifting dynamics in energy. We also have banking, power, currency stability, and capital inflows. Now, on one hand, there are clear signals of reforms and optimism, improving forex stability, stronger banking capital positions, and efforts to expand electricity access through renewables. Now, on the other hand, we have structural concerns from credit not reaching SMEs to crude supply constraints affecting fuel pricing, rising power sector debts, and disputes, right? And continued foreign investor caution in the stock market. You see, we have two horns that have a lot of things. But the big picture question becomes, are these reforms and inflows translating into real economic relief for businesses and households, or are we still seeing strength at the top without deep impact at the base of the economy? And having this conversation with me, I have on the call Daniel Efa, who is a global business analyst. Good morning, Daniel, and welcome to today's show. Daniel, can you hear me? Good morning, Daniel. Can you hear me? Okay. I also have with me economist Abiola Adekunle from Key to Markets. Good morning, economist Abiola. Are you here? Yes, I can hear you clearly. Good morning, and well, welcome to today's Business Lens. I think this is the last Business Lens in the month of March. How did your weekend go? Okay. Now, I don't know if you heard when I talked about the headlines, and I'm going to be starting with the federal government unveiling the 12 billion naira digital economy research fund, alongside the plans to roll out 90,000 kilometers of fiber on that project bridge. Now, coming to you, how do you see this initiative, and how do you think we should ensure that this doesn't become just another policy announcement, but it's, to actually translate into digital access, innovation, and jobs for everyday Nigerians?
Okay, when it comes to anything digital, it's something that is quite interesting for me. Sorry, apologies, my internet might be a little shaky, but for me, anything digital, it's a good way to go, because it's 2026 and almost everything in the world right now has a digital counterpart. Okay. So the FG actually pushing into this, investing in this, it's a good way to go. And I can tell you for free that it's going to bring in a lot of work, a lot of jobs in the secondary effect of this particular rollout.
Okay. Now, what do you think are the biggest execution risks with projects of this scale, and how do we measure, real impact beyond infrastructure?
Well, first of all, we cannot neglect infrastructure, so we'll go back there first, because anything digital is also based on physical stuff to start with. Okay. Someone was talking about a particular, satellite internet, and the person was making an assumption that even if they cut the cables in the sea, that internet will continue to function, which is a total lie. In as much as we have that wireless, low orbit circulating internet, we
Okay.
still have it reliant to some extent on fiber cables. So the infrastructure, first of all, has to be physical, then digital. Now, for it to be physical means that to a very large extent, we have to safeguard it, because if any of those physical infrastructures in remote areas are damaged, it will affect the digital effects that we are trying to get. So security is very important when you are doing such. For
Okay.
example, if you want to take fiber cables from here to Ondo State, it will definitely pass through some interiors, pass through some remote areas, and those remote areas have to be safeguarded to make sure that these cables are not tampered with at any point in time. Now, once we are done with the physical part, we
Okay.
start looking at digital impact. Digital impact goes a whole long way, like I said, because the going beyond the fact that it's a research fund, we have a whole lot of things that we are playing catch up with in the whole world. So this is going to quickly bridge the gap between we global space, because now we can know exactly where to push and lean our weight and quickly catch up with the world, so that we too can benefit with benefit from whatever is going on in terms of the digital space. And believe you me,
Okay.
Nigerians' median age is below 20 years, meaning that we have a lot of young people, a lot of Gen Zs. These guys were born into the digital age. A lot of them don't even know anything about the analog. Show them a cassette, like a normal cassette player. Some of them can ask you what is, because they practically don't know. So it really go a long way to push the dominant number in our population forward in the global space.
Okay, now when you said Gen Zs, but we don't have only Gen Zs. So I don't know why Gen Zs is now the best. That's is everywhere.
Do you feel attacked?
Not really, not really. Now, but diving back into our conversation, right? Are we finally closing Nigeria's digital divide, or do you think we're just widening it in new ways?
Well, we are not closing up anything yet.
Okay.
We are attempting to close it. We are definitely not widening it. You will see that the divide has to do more with age brackets than with available technology. So there's a difference between, this thing is not available, but people actually want to do it. And this thing is available everywhere, but some people are not just interested in doing it. We still have some of our parents saying, come and help me do something on my phone, come and help me transfer to my OPay, and all that. Meanwhile, the C is actually doing that conveniently. So I believe that the divide is being closed, but where we have gaps remaining has to do more with education for a certain age bracket.
Okay, now let's take a swipe to the next story on fuel pricing and refinery sustainability, which is the Dangote Refinery that reduced petrol prices to 1,200 naira per litre from the initial 1,275 naira per litre, amid reports of a significant crude supply shortfall of about 79 rather. I think it's 79.5 million barrels between October 2025 and March 2026. Now, how do you say this? Because on the one hand, we say, our crude, what's it called, Dangote, is supplying around 92% of this. And then we also have headlines that trended sometime last week saying that Dangote is now fixed in a place where he's going to be supplying to other African countries. And now we are seeing that there's a shortfall if you check the data from October to March of 2026. How do you see this?
I lost you there for a minute, but I think you're talking about the pricing of the Dangote supply. Am I correct?
Yes, because I'm asking if there's a shortfall. Can you hear me now?
I can hear you now.
Okay, so I'm asking if there's a shortfall from the reports that says from October of 2025 till March of 2026, there's a shortfall in Dangote's operations, and then we now having come out to say, oh, I'm going to reduce the fuel price from 1,275 naira to 1,200. Now the question is, because of the fact that he has put himself or positioned himself where he has to supply, petrol to other African countries, do you think that this can be sustained, or should we be worried about the fact that because of the shortfall he might not be meeting up, or because of the shortfall the 1,200 naira pump price, petrol price might not be sustained?
Well, I think that we spoke about this earlier when I think Daniel, okay, he has not said anything yet. When we're talking about particular issues some weeks ago, that Dangote is a businessman, and at the end of the day, he will gravitate towards where you will get most profits. If you're telling him to be patriotic to an extent, then it's a very big ask, because at the end of the day, he's a business person. Now, he has reduced his price, but the effect, like you said, is that he doesn't only have one end pump, what's called end product location. He's also supplying to other countries in Africa. That means that if there's a shortfall in his production, it's going to affect everybody. It's either you cut off majority of the people you're supplying to outside Nigeria and focus on Nigeria, or you just ration in between the two. At the end of the day, it might not be really sustainable if it continues this way and they have not ramped up production. So what it leaves for, we need to just wait and see, really, because I'll wait for us to see accused to return back to filling stations.
Okay, now do you think that domestic refining truly stabilize fuel price in a volatile global oil market?
Come again, please.
I said, do you think that this whole us being able to have access to local refining, do you think that it truly stabilized fuel prices, especially now that we have a volatile global oil market?
It's to some extent there's an advantage there.
Okay.
I was discussing with Daniel before the show. He's also on the show, and I was telling him that what does he think we are really gaining as a country that has both crude oil and one of the biggest refineries in the world right now? Because I was of the opinion that, okay, fine, we have some level of stability because we don't have to 100% depend on imports. If we were 100% dependent on import by now, maybe a lot of things would have happened, maybe rationing, maybe some filling stations would not be selling and all that. But as it is right now, the only thing we're noticing is that there's an increase in price, but the PMS is available. You see, so many. I'm not seeing any petrol station that is closed. Everyone is, open. So that's the stability that we get, or that we are getting for now, which is fantastic. But I think we can go a step further by actually subsidizing it in a way. What I mean is this: the crude oil belongs to Nigeria. Okay. Nigeria can actually say, okay, we're going to be giving Dangote at a particular reduced price. And if we're giving at a particular reduced price, we also expect so-so price at the end of the day on the other side. Now, what this will do is that to cushion the effects for those that are actually buying at the pump. And that, okay, we want you to go back to 835 naira, but you tell us what price of crude oil you would need so that we supply you at that price. Just for now, it's not something that will continue forever, because it's a way to cushion the effect and to make sure that Nigerians are not, be on the other end of this whole thing. Because whether you like it or not, the price of crude oil has gone up, meaning that the country is making more money from it. But the citizens are more or less the ones that are now paying, for the increased price. There needs to be some form of subsidy or cushioning effect for everybody that is buying PMS right now. So if the federal government can have a talk with Dangote and say, okay, well, for now, we're going to be giving you some level of discount so that you too, on the other end, can sell at some level of discount and hereby easing everybody's pain.
Okay, I was going to ask you about how worse do you think it could get for the common Nigerian, especially if we continue to have crude supply constraints, if it continues to persist, or maybe get worse than it is right now? How worse do you think it can get?
Well, it's if it continues this way, said it before that it is very possible that we might be looking at the 2000 range. Why we have not gotten there now is because we have local refiners, and not just Dangote, but we have other modular refineries. One way or the other, all of them are contributing their quota. If all of them are not there, by now we would have crossed 2000. Because we have, it's a case of demand and supply. Our supply right now is extremely low. Demand remains the same. Therefore, price will continue going up, so as to weed off that demand. So if this situation continues and there's a pool of demand from other countries in Africa that maybe Dangote has to supply to, then what Nigeria gets becomes increasingly lower, which would, in effect, increase the amount. If the amount are not increased on the pump, by the pump, in the filling station, it will go to the secondary market, which we usually refer to as black markets.
Okay, thank you for that one. I think we have Daniel joined us back. We have been discussing about, we discussed two issues already, one on the digital funding for research, and then we also talked about the fact that Dangote has not reduced the price from 1,275 naira to 1,200 naira. Do you have any other thing you want to add as regards to it before I push to the next conversation that we have?
Okay, so for me, I think the concern is about the Dangote Refinery
Okay.
reducing prices, which is okay because then um, it just shows how volatile the space is at the moment. Even though the Dangote Refinery conversation might not just be just about the price of crude, there might be other issues which might be connected to the US-Iran issue, the supply issues, because listening to the CEO of the refinery the other day, and he was emphasizing the fact that they have supply constraints right now because of the limited supply they get from Nigeria, and the fact that they need to blend a whole lot more other crude to be able to get what they already have because of the cost. Crude is expensive, but it's part of the high-end crude in terms of prices. And it's difficult right now to get the cheaper crude, which is mostly found in the Middle East. So the lack of movement from the Strait of Hormuz is really affecting uh, uh, that supply. So we'll definitely see more volatile pricing from Dangote, even though this is the kind of time you begin to wonder why suddenly we cannot supply enough for Dangote Refinery to be able to have enough supply that would ease our own local demand. And if the fact that it's not doing that, we're not giving him much of that, simply means that there's a possibility that he can even decide to say, I'm selling all of my petroleum products to other countries because now the demand is coming from West African countries. So we are in a very, very funny state if this war continues and Dangote, for example, get outside of Nigeria, we might be seeing a case whereby uh, we might have supply shortages, which is what we don't pray for. Uh, as it stands, according to what the figures that came out in January and February, that almost 90% of our current supply comes from the refinery, means that we are basically working on the eggshells, and we cannot afford to deny the refinery of supply, right? So it is so funny that it's whenever prices are high that you see that you suddenly have shortages of crude supply. Whenever the prices are low, we'll suddenly be eating 1.7 million barrels, 1.6 million barrels. We'll start start talking to OPEC to give us more quota. But as soon as prices rise, we start struggling with 1.3 million barrels, 1.4 million barrels. So I don't get the concept around that, but government has a lot to do when it comes to ensuring that we keep pumping as much as possible. Prices are quite high, and we reduce the tendency because we are not subsidizing again. So the only benefit Nigerians can benefit is that there's adequate supply, right? And government is also making enough money from the crude oil sales. So yeah.
Okay. All right. Let's take a swipe to the Nigerian banks, because we have the fact that despite that Nigerian banks raised over 4.61 trillion naira in fresh capital and attracting, strong foreign inflows. We have the private sector lending that remains around 17% of GDP, with SMEs getting just about 1% of total credit. Now, the question is, why is there still, such a disconnection or disconnect between banking strength and real economic support?
That is a very, very sensitive question because um, it is usually like that, right? So
Okay.
the truth is that Nigeria is a very, very imbalanced economy in the sense that our real sector is not performing optimally. Our real sector has been hit with the biggest effect of any of the reforms that have been affecting us in the past 10, 15, 20 years, right? So it is, and that is the real reason why we are struggling, right? So what we now see more, particularly in the recent times where stock market growth is overshadowing everything. So because real sector is not doing well, right? You would not attract FDIs that will bring in the liquidity that would move other sectors forward, right? So instead, because of high interest rates, right, people would prefer to move this cash into those treasury bills, bonds, keep it in stock markets, and you need the only access to all those markets is just the bank. So you don't need to move your funds around. Your fund
Okay.
just stays in your bank. Your bank initiates its transactions, right? So that is why it is easier for the banking sector to have access to more capital, right? And
Okay. Daniel, are you still there? Okay. Now, let me come to you, Economist Abiola. Now, would you say, or is the banking sector becoming more profitable than productive? And if you say yes to either of them, what structural barriers do you think are preventing credit from reaching the SMEs?
Come again with the first line.
Okay, I said, do you think that this whole banking thing has issues between the profitable and the productive? What is the disconnect or the connection between the banks now being profitable than being productive, especially as regards to the fact that the SMEs likely most of the times do not even have access to some of those funds. I said that we have 17% of the GDP while the SMEs, get those things at, I think, around 1%.
Yeah, SMEs are always the foundation of any because the SMEs are dead. You have the companies, the corporations, and at the end of the day, those corporations to the grassroots, they do not actually connect the building blocks of that particular economy. Now, so for this SMEs 1% stuff, I feel the SMEs should have much more access to finance, to loans, and also there should be a guide, by banks. I said this before that most of our banks are more deposit driven than productivity or creativity driven,
Okay.
which means that if you have a marketer in the bank, that marketer is more or less just going to warehouse money. In fact, when you see their target has to do more with account opening, deposits, accrued, and all that. But the bank in the real sense is not meant to be limited to that. The bank in the real sense should be a place where you support inventions, support production, support manufacturing. The bank is the backbone of most economies. So if a bank is just looking to move money from one place to another, that means that if you say, oh, bring a target of 1 billion, then you go to another bank and go and bring it. Is that really what a bank should be? Now, banks should focus more on SMEs. And I've said it before, there is even a way that maybe they can do an SPV, a special, vehicles that can put the bank and some SMEs inside the same container, so that as the SMEs are profitable, the banks can also be getting out of those profits. We want to see SMEs do better in Nigeria because these are ways that people can actually get involved. How many people are involved in banking management? They're very limited. But we talk about SMEs, then the number multiplies exponentially.
Okay. Now, with foreign capital inflows into Nigeria's banking sector rising by 93% to $13.53 billion, while the naira shows cautious stability around the 1,835 naira per pound, yet the stock market still records, 72.32 billion naira in foreign outflows. What story do you think the stock market is really telling us about investor confidence in Nigeria?
Investor confidence is stable.
Okay.
I won't say it's increasing rapidly, and I won't say it's decreasing. I'll say it's stable, and I think we're on the right path, because this is the direction to go. For some time now, we've not been fluctuations in the market, which is an indication of stability. Even though when it comes to trading, for traders, we believe volatility and fluctuations give us more money. Because a market that is not moving up or down is where do you want to make the money from? But for it to be stable and gently rising, I would say we're in the right direction. And for now, the story being told is that Nigeria is increasing in terms of investors' confidence.
Okay. Now, when we look at all of these things, even though I'm going to give us more details on the stock market, but I want us to drag it a little bit to the banking. Now, why is banking attracting capital while we have equities that are losing it?
Yeah, so the two issues are relatively not connected, right? Why am I saying that? The stock markets losing certain funds is simply because investors are getting smarter. For the first quarter of the year, which is ending tomorrow, people are taking profits because if you can see what's happened from January to date, people have at least some considerable level of profits in some certain sectors and stocks have done some good numbers. So some have done upward of 100%, right? So investors are basically just taking out their what's the word, their profits early enough to be able to get set for the second quarter. That's one. Number two, when it comes to the banks, I think that I was talking about it earlier before network issue happened, is that they've been stable in terms of the sector has been stable from the regulatory point of view down to the activities of the banking of the banks. Yes, I also share Mr. Bela's sentiment that the banks are not as dynamic as they should, which is as they are meant to be, but everybody basically works with the industry they are presented with, right? So they are trying to survive based on their industry. They are spreading out wide, they are increasing their capital base, they are expanding across Africa, some are even going into Europe. The whole idea is let us make more money, and the fact that we are seeing very high level of foreign portfolio investment means that the bank will definitely be a very big recipient of that. So as far as Nigeria is concerned, the banking sector is almost at that kind of sector that you're not necessarily going to be very worried about in terms of the bank, in terms of the bank's approach to being able to increase their capital base and also spread out wide. Over time, when it becomes less risky to invest in local businesses, I'm certain that these banks will also take initiative because even for individuals in the real sector, it is a very serious conversation, almost difficult conversation to be able to have to want to invest in SMEs right now if you don't have some level of government assurances here and there to give out the funds. So I think for the banks that they are doing what they are required to do to stay afloat and to keep being productive and keep giving the numbers and also helping Nigeria's GDP to keep growing.
Okay, before we go deeper into discussing the stock market, let's go on this short break. When we come back, we'll continue the conversation. Stay with us. You're welcome back. This is still the Business Lens on Rapid Television, Abuja. My name is Divine Alex. I'm diving straight into more stock market updates. As of the last trading session on March 27th of 2026, we have Nigerian's stock market holding firm above the 200,000 mark, but we are seeing a slight 0.02% pullback as investors begin to take profit following recent record highs. Now, despite that dip, the NGX is still up nearly 3% month to date in March 2026 and about 90% year on year, highlighting the strength of the ongoing market rally. Now, we also have trading activity also remains strong as of the March 27th section, with over 594 million shares exchanged, although investors are becoming more selective, signaling a more cautious phase in the market after the surge. And that's how we're going to be wrapping up on today's Business Lens today. Thank you so much, Economist Abiola and Daniel Efa, for being a part of today's conversation.
Thank you. Thank you for having us.
All right. So my name is Divine Alex. Do not forget that when you stick around the Business Lens on Rapid Television Abuja, you get to understand the numbers and how to actually put your money to good use. Bye for now.